Hey guys, and welcome to the Working Money Channel. Regulatory clarity, I know that's been the name of the game for quite a while now. We want XRP to thrive in this space, but could regulatory clarity actually be a hindrance to us? And I'm talking not for the long term, guys, I'm talking for the short term. I have a theory I'm going to get to a little later on in this video, and I'm going to talk about some articles in this video that are going to have to do with that theory, so it's going to wrap everything up in a nice, neat little package. And right now the XRP price is at about 23.5 cents. We aren't seeing much movement. Of course, the space hasn't been very active as of late. You can see that down here with the volume, low volume, XRP. I have this trend line that I drew here on the chart yesterday, denoting where we need to break in order for the entire trend to go lower. Of course, I've got my target price point down here at 19.7 if that happens, 0.197. And when we look at Bitcoin, ultimately, we are still at the mercy of Bitcoin, as we always have been. Bitcoin was the #1 cryptocurrency ever in existence, and it still dictates where the market's going. So this is part of what I'm going to talk about later on. Bitcoin price right now, 10,551. Bitcoin trend actually looking okay. We could still go either way, lower or higher. It really is going to be dependent on a lot of things. And I want to start first with a few pieces of news with regards to Ripple and another Finastra partnership. So Ripple partner Finastra, the third largest financial service company in the world, has been selected by First Independence Bank to expand the retail side of its business. This coming from XRP Crypto Wolf. And so we know a lot of Ripple's success is going to be based in their partnerships. And Finastra, a big partner, has been on a frenzy as of late. According to the article, First Independence Bank, which has been part of the Detroit community for half a century and works primarily with underserved and minority populations, will cooperate with Finastra to use its fintech solutions. The bank is the 7th largest African-American owned bank in Detroit. Now the bank has decided to involve younger customers and offer them with new digital banking solutions provided by Finastra, Fusion Phoenix Code, Fusion Digital Banking, etc. Those products will also help the bank to improve its efficiency and provide its clients with more streamlined and contemporary banking services. So Finastra obviously expanding their reach, since they are Ripple enabled, and since Ripple is a company that is a very big proponent of helping bank the underbanked or the unbanked. This partnership makes a lot of sense. So I wanted to thank XRP Crypto Wolf for posting that. Guys, we're seeing more clarity in and around the world, and this is just another example of this. Another one from XRP Crypto Wolf. Zimbabwe Stock Exchange is open to listing Bitcoin and other cryptocurrencies with regulatory approval. Now, there was a time in history where, listing Bitcoin would be taboo, very taboo, especially in the traditional trading space. But now we're seeing countries like Zimbabwe realize, okay, maybe this is another opportunity to list something else, something that could really do well. We know that the currency in Zimbabwe has been very, very devalued. So the people of Zimbabwe are already familiar with Bitcoin in that regard. And so the ZSE, the Zimbabwe Stock Exchange CEO, Justin Mgoni, says its recently licensed subsidiary, the Victoria Falls Stock Exchange, is open to listing Bitcoin and other cryptocurrencies. However, according to a local media report, any such listings are still dependent on the digital asset issuers getting, quote-unquote, regulatory approval. Regulatory approval is going to be a central theme in this video, guys. Just absorb everything, take it in, and then I'm going to talk a little later about the crypto market with regards to this. So the report does not provide any details of requirements that cryptocurrency issuers must meet their prospective tokens to get listed. Furthermore, some in Zimbabwe's small crypto community are still skeptical about the announcement, especially since it's not coming from the regulators. Others say the statement attributed to the ZSE executive exposes the limited understanding of decentralized cryptocurrencies like Bitcoin. So there still are a lot of issues that these guys are facing. However, they are open to listing Bitcoin. I think that is the key takeaway here that I want you guys to look at. More expansion around the world, and Zimbabwe, just another country in the recent list of countries that we've seen that are getting warmer to the idea of cryptocurrencies, Bitcoin specifically. We've heard of institutional investors really wanting to dig their claws into Bitcoin. We've seen Bitcoin hodling volumes soar over the last little while, and big investment firms are investing in Bitcoin. What was the firm? Was it Great? No, it wasn't Grayscale. I think it was a traditional firm like Fidelity, something like that. How they had put in, and I don't think that this could be inaccurate. I don't know if it was Fidelity. They bought, I think, $1 billion worth of Bitcoin. It was one of those guys. They really went all in on Bitcoin, and it just goes to show you how much confidence the market is now shifting its point of view on cryptocurrencies like Bitcoin. And so this switch is going to happen. And yes, on the one hand, it's going to be good for the crypto market as a whole, for cryptocurrencies like XRP to thrive. But guys, with the good comes the bad always. Gonna keep moving along though. This news from 321XRP at XRP_HODL_ on Twitter. Big news, Ripple case order of dismissal approved. Who can check Pacer and verify? So apparently, it looks as though at least one of these cases was dismissed. Some people questioning this. Update to the Zakhanov case. 6th and 7th claims dismissed with prejudice. Here's the conclusion from the other day. 4th claim was nearly dismissed, only waiting on discovery to reveal Garlinghouse's actual XRP holdings at the time he claimed he was very long XRP. Conclusion, and then there's a conclusion written down here. I don't think all these cases are in fact dismissed. I think that they are still in the courts. Baby steps for this case. As we know, sometimes these things can take a long time. We had Sam I Am here on Twitter at Green Eggs and Ham. Talking about this as well. Looks like most of the California claims have been thrown out, save one. We may find out that Garlinghouse is holding for them to dismiss the final one. The remaining claims will be headed to trial, which might not be good. As some people pointed out in this Twitter thread, going to trial means that you're going to be in front of a jury. And so if a jury wants to side with Ripple based on their knowledge of Ripple and XRP, now what are the chances that this jury is going to know the company Ripple, understand cryptocurrency in a broader scope, and really get the essence of what's going on here? Chances are, because juries are just random people that are selected, they are very, very low. Considering the low percentage of Americans that understand cryptocurrencies, I don't see this going well if it does go in front of a jury. So this could mean, and certainly does in fact mean, a longer legal battle for Ripple with regards to this trial, which I think, is just kind of annoying in a lot of ways because it feels as though this has been frivolous from the beginning. They did amalgamate some of these trials into one so that they could take place in California. So Ripple's legal team has been working overtime to help combat these claims against them. We know XRP, a utility token used for a purpose, not to fund the company. I know some people would disagree with that statement. I truly believe that, Ripple has had so much VC funding. I mean, heck, they just received another round recently within the last few months, the $200 million from some extra investors to help maintain their goal, to help continue doing what they're doing. So, for the one guy that got burned on his XRP investment in 2018, Sostak, he really is creating a big problem for Ripple. I'm not too worried about this, guys. I know this is in the court, and I know that, that they still haven't come to a decision on this. A lot of this does take time, as you know. So I'm not sitting at the edge of my seat waiting for the outcome of this. I do sincerely believe that Ripple already has a stronghold within the system. We know the connections they have behind the scenes. We can see the benefits of their technology. We also know that there are prominent figures who are very, very pro-cryptocurrency, pro-XRP. Brad Garlinghouse has had meetings with important bodies around the world with regards to the future of finance, all that stuff. So this is just noise in the meantime, in my opinion. But regulatory clarity is going to help clear some of this up. Guys, I saw this from the Rock_XRP at LuckyJohn_XRP. Will the Securities Clarity Act clear the way for XRP adoption? Now, here's an interesting quote from lawyer Jake Chervinsky. He weighs in on this. So, Congressman Tom Emmer has introduced the Securities Clarity Act, which aims to provide regulatory clarity for digital assets and blockchain networks. The bill would eliminate fear of additional regulatory uncertainty for companies hoping to distribute digital assets as long as they have complied with current securities registration requirements or qualified for an exemption, according to a press release from Emmer's office. But the new legislation still may not clear up the classification of crypto assets like XRP. This according to Jake Chervinsky, and I bring up the tweet here on Twitter as well, so we're going to get to that in a sec. But here's what he says, ultimately, that the Securities Clarity Act likely won't impact XRP's security status at all. He goes on to say, I struggle to see how it could apply. Ripple sells XRP non-investment contracts to fund creation of some new asset that they may be delivered later, like SAFTs, and regardless, the bill explicitly doesn't apply to an asset that is itself otherwise a security under the Howey test, so it wouldn't impact any arguments about whether XRP itself represents an investment contract at the time of sale, Ripple's promises, purchasers' expectations, etc. That is, it should be irrelevant regarding Ripple's class claims. So a big part of this we got to understand is the fact that they are still trying to classify cryptocurrencies under the same old guidelines that they were to classify securities. Okay, like when the Howey test was first introduced, I believe it was in the 30s, it was a very, very different world. And now we're living in a new world where these kinds of tests just do not apply. So for his part, Emmer, a Republican from Minnesota and noted supporter of the crypto space, has said in the past that he doesn't believe XRP, which is used by the San Francisco-based payment startup Ripple, is a security. This is Tom Emmer, who introduced this bill specifically, okay? I also want to bring up this point here. The bill would eliminate fear of additional regulatory uncertainty for companies hoping to distribute digital assets as long as they have complied with current securities registration requirements or qualified for an exemption. Who's to say that Ripple didn't qualify for an exemption? I don't know. Maybe if you have some ideas, put it down in the comments. But as far as I know, that is also very, very possible. So Emmer also believes XRP is not a security, shouldn't be classified as one. The XRP classification in particular matters for Ripple. Obviously, the global payment startup is currently facing lawsuits, as we all know. It mentions Sawstack in here. Emmer's new bill would classify digital assets sold as objects of investment contracts as investment contract assets. Explains his office, the approach is technology neutral and applies equally to all assets offered and sold, whether tangible or digital. This new defined term would refer to any asset sold as part of an investment contract that would not be considered a security, but for its sale as part of an investment contract. Very, very convoluting the way they are wording this. Of course, this is legal jargon, and I think ultimately at the end of the day, what we have to remember is that if a token provides utility, if it's not just used to bolster up a corporation's coffers so that they can operate, if the token actually is utilized in another way, i.e. to provide on-demand liquidity for cross-border transactions, then it should be considered a utility token, not a security token. That is me just making it as basic as possible. Of course, there are complexities to this, no doubt. So the tweet thread, Jake Chervinsky saying, this is a non sequitur to me. I don't see how the Securities Clarity Act would impact XRP security status at all. Guys, I'll link this in the description if you want to read further. Here's another tweet here, guys, from XRP Crypto Wolf. Ripple's Senior Vice President of Product, Asheesh Birla, said RippleNet is ready for changes that are going to transform the global payments industry within the next 10 years, ultimately stating that Ripple is ISO 20022 compatible and that they are ready for the payments industry in the coming 10 years. They are future ready. Birla stated that RippleNet is already compliant with ISO 20022, so the blockchain giant is well prepared for the coming changes. ISO 20022, guys, as you know, is going to be the industry standard. As you know, is going to be rolling out at the end of 2021, early 2022. That is kind of like the crux in the timeline for this to really kind of take off. After that point, 2022 and onward, that is when they're going to run with it. But the transition point, end of 2021, early 2022, and I don't mean to beat a dead horse, but the Martin Armstrong prediction. And guys, if you haven't seen my video about that, I will link it up here again in the top right-hand corner. I got a lot of great feedback from that video. Some of you guys even found the Forecaster documentary on YouTube. Apparently it is on YouTube, so you guys can check it out. The Forecaster, it was released in 2014. But Marty Armstrong and his prediction also, it does coincide with that same timeline, 2021 into 2022. Let's not forget he originally made the prediction for 2021 back in 2018 after the crypto market had soared. And just last month, he is predicting that, we are going to see more civil unrest. The economy is not getting any better anytime soon. So this could impact a multitude of things. And this coincidentally, or maybe not so coincidentally, is also coinciding with the ISO 20022 adoption, the crux of that timeline being end of 2021, early 2022. Thought I'd bring that to your attention, guys, because I wanted to switch gears a little bit, and it'll all make sense, guys, I promise you. This from Michael at Val5Link. So we heard about the BitMEX scandal yesterday. BitMEX sees largest single-hour Bitcoin outflows ever following the CFTC charges. Now, Arthur Hayes and his cronies were recently charged for fraud. BitMEX has long been a source of polarization within the crypto industry, despite many traders blaming it for the so-called scam wicks and immense volatility within the crypto markets. It remained the largest and most widely used Bitcoin trading platform. Its dominance over the fragment of the market has been waning over the past few months, as a cascade of liquidations seen on the platform in March is what caused Bitcoin to nosedive from 8,000 to 3,800 over the span of just a few hours. Of course, there was the beer flu pandemic. The entire economy was shut down, so I don't know if I agree with that entirely. Users are now fleeing the platform, though, in droves, likely due to fears regarding U.S. authorities from seizing the website and locking up the funds on the platform. So, the BitMEX founders were recently charged, and now BitMEX has seen the single largest Bitcoin withdrawal ever. Interesting to note, let's not forget, guys, a lot of these guys that run these exchanges, the Arthur Hayeses, the Brian Armstrongs, these guys have been in the crypto industry, a lot of them at least, have been in the industry since the beginning. Let's not forget, Bitcoin used to trade under a penny back in 2010. Okay, I just want to put this into perspective for you guys to understand the magnitude of Bitcoin and the wealth that some of these guys likely have. You know, it is undocumented how much money a lot of these guys have. You can only imagine if you could get Bitcoin for under a penny. Well, think about how much XRP you have, and you probably bought it. A lot of you guys bought it over a penny. Think about how much XRP you had. Now think about if XRP went to $10,000 per coin. How filthy rich you'd be. Well, this was a reality 10 years ago when these guys got into Bitcoin, okay? They purchased Bitcoin. A lot of them held for many, many, many years, maybe cashed out some along the way. These guys are worth hundreds of $millions, if not many of them are likely billionaires. Let's just put it into perspective. Okay, so there's this announcement. Then I wanted to get to this. So Mac Attack XRP bringing this up. 50 Bitcoins worth over $500,000 mined in May 2010 mysteriously have moved from Bitfinex. So not BitMEX, we're talking about Bitfinex now. But this is also important. Let me read you this. Bitcoin worth roughly $500,000 was moved to one of Bitfinex's hot wallets a couple of days back. This might seem like nothing but an ordinary transaction if it wasn't for the fact that the BTC in question was mined back in May 2010, and it hasn't been touched since. At the time, Satoshi Nakamoto, Bitcoin's synonymous creator, was still active. So what this outlet is suggesting is that maybe it could be Satoshi Nakamoto's Bitcoin. Possibly, we don't know. Also down here, it's suggested that, or rather it's stated that this is only the second transaction that it has ever engaged in. So this Bitcoin has only moved twice in 10 years. The first one took place all the way back in 2010. This means that the address has received 50 Bitcoin 10 years ago for mining a block on Bitcoin's network and hasn't touched them since. Needless to say, the time is more than paid off, as BTC back then was virtually worthless. It's also interesting to note that this was during the time that Satoshi Nakamoto was active. I think you guys get the point I'm trying to make here, though. Bitcoin is moving now, and this is another example of this. We have heard of other examples where large quantities of Bitcoin have shuffled accounts. Now, I don't know if you guys were here back in 2018 and early 2019 when the market was ultimately doing this. We weren't hearing this kind of news, okay? If you guys aren't looking at the screen, I'm showing the downward trajectory of the bear market, the crypto bear market in 2018, 2019. Now, as the market is doing this, we are seeing more Bitcoin moving from wallet to wallet. We've also found that since Bitcoin has almost retraced to this high up here, this is where these Bitcoin whales, so to speak, are getting very, very excited about moving their Bitcoin. Let me keep moving along, though, to this. Michael at Val5Links posted this article from CoinDesk, okay? Binance, Gemini, and Kraken are so far the winners from BitMEX's legal woes. So as we were seeing BitMEX, the Bitcoin leaving BitMEX because of the scandal, these users are now putting their Bitcoin on the Binance exchange, Gemini, and Kraken, okay? So of course, a bit of a shakeup in the industry. People obviously want their Bitcoin to remain safe. So what are they going to do? They're going to take it from one, I would consider more shady exchange, and put it onto a more reputable exchange like Binance, Gemini, Kraken. As this article states down here, these exchanges are more regulatory compliant, obviously, would likely have less problems when it comes to their CEOs complying with rules and regulatory clarity. And so, guys, I wanted to bring your attention back to this article here. Harry at _the_cool_twin posted this under one of my tweets from yesterday. BTC investing. Meanwhile, JP Morgan gets fined for market manipulation as well. Guys, this article is not new. It was back from last November, but it does paint an interesting picture, and it got me thinking. This is why I'm bringing it up. Researchers have escalated their claims about market manipulation in the winter of 2017, now claiming that a single whale, guys, let me reiterate, a single whale was responsible for Bitcoin's historic price surge back in 2017. The development was reported last November 2019 by Bloomberg. John M. Griffins and Amin Shams of the Universities of Texas and Ohio, respectively, have updated the previous research, which made the case that the market misconduct was allegedly behind Bitcoin's bull run to an all-time high of $20,000 in December 2017. Clairvoyant marketing, timing, or manipulation. Griffin and Shams' analysis, first published in a research paper back in June 2018, had argued that transaction patterns on the blockchain suggested Tether had been used to provide price support and manipulate the Bitcoin market. Purchases with Tether are timed following market downturns and result in sizable increases in Bitcoin prices. The flow is attributed to one entity, clusters below round prices, induces asymmetric autocorrelations in Bitcoin, and suggests insufficient Tether reserves before month's end. So what they were doing was they were using Tether to help secure profits to ultimately move their Bitcoin in, and then as the price fell further, they would put it back into Bitcoin, and it would create more demand, more price action, and the market would continue to move up. Rather than indicating demand from cash investors, they argued that these patterns align with a supply-based hypothesis of unbacked digital money inflating cryptocurrency prices. In an update to their previous research, the academics are intensifying their argument, which is set to be formally published in a forthcoming peer-reviewed paper for the Journal of Finance. They reportedly argue that the analysis of Tether and Bitcoin transactions from March 2017 through to March 2018 consolidates their view that a single entity, guys, transacting via Tether's sister firm, crypto exchange Bitfinex, is behind the manipulation. This pattern is only present in periods following printing of Tether, driven by a single large account holder and not observed by other exchanges. You understand why Tether is being scrutinized as well now. If the Tether stablecoin has been used in this tactic by one, in this case, one market manipulator to raise the price of Bitcoin all the way from wherever it was trading when this was occurring, March 2017 when Bitcoin was about $1,000, all the way to $20,000, you can see how this could be enticing for many crypto whales to make a lot of money while the market is still, in my words, the Wild West. Remember when I was talking about crypto regulatory clarity? That is good on the one hand because we need regulatory clarity for these lawsuits to get thrown out, for Ripple obviously to be able to function in the world, and for the value of XRP to rise accordingly. So I'm pro-regulation, but I'm also pro-making money, guys. And if this is true, and if we could see a repeat of the last bull run this time around, is it going to be because of market manipulators? As they suggest in this article, only one market manipulator who manipulated the price of Bitcoin utilizing Tether. It was only one guy or gal that was able to raise the price all the way to $20,000 per BTC. Now, let's not forget that a lot of these guys know each other in the space. A lot of these guys have a lot of money. I did a video back in the summer of 2018, what it took to be a Bitcoin whale. And I'm going to link it up here for fun if you guys want to catch that. I did a price model and I did a for instance. What if you put this amount of Bitcoin at these points in time? Let's not forget the crypto market was very, very small back then, but there were a lot of people that were really, really into Bitcoin. The Charlie Shrems of the world, the Pomplianos of the world, these guys got super, super rich by accident, okay? Who knows how much Bitcoin they hold now? Guys, let's not forget, and this is just the Wikipedia of the price of Bitcoin. Way back when that Bitcoin was mined back in May 2010, Bitcoin was less than a penny, less than 1 cent per BTC. And this chart just shows you guys the price, where Bitcoin went. Back in March 2010, BTC was only trading at 0.003 cents. It is very, very possible that a lot of these guys that got into Bitcoin back in 2010 are holding hundreds of thousands, if not millions of Bitcoin spread across various different wallets, and they could be scared. They could be scared that regulation is going to ruin the party. And so could this trigger another crypto bull run before we see the regulatory clarity? Because these guys, these pioneer investors in Bitcoin, want to cash out of their positions before it becomes a regulatory nightmare. If what we are seeing is correct, and one guy bolstered the bull run of 2017, could you imagine what a dozen veteran Bitcoin investors could do to the market? And guys, you know why I'm happy about this? Not because I'm a Bitcoin maximalist, because I'm not. The reason I'm excited about this is because when Bitcoin rises, the rest of the market rises with it, guys. So that means XRP, new all-time highs? It's certainly a probability, but that's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.